And what's up, you guys? Welcome to the Mango Grove. My name is Krisha, and this is today's Bitcoin and Solana analysis video. Now, I'm going to try and keep this one as short as possible because I am very, very sick. However, I just feel like there's so much to talk about. Markets are moving, volatility has picked up. In fact, a lot of the altcoins have broken into these brand new volatility zones. So if there's any time to be looking at the charts, it's now. If you're looking for opportunity, it's now. And I do believe that momentum across the board is changing. So today, of course, we're going to be talking about certain things that, we've been building a story for. Number one is, the events that I brought up to your attention, the important economic events that will have an effect on price action across the board. So I want to be talking about the two numbers that got released very recently in terms of FOMC minutes and job reports. FOMC minutes is just more like a narrative as opposed to a number, but job reports did come out. So I want to be talking about the two numbers in relation to the markets, as well as, of course, we'll be jumping into price action, that is Bitcoin, as well as the altcoins. Now, it goes without saying, that like button, guys, goes a long way. Sean and I put a lot of effort into these videos, into finding the data for you guys, to building that story for you guys. So if you've been enjoying the content, make sure to smash that like button because it does go a very, very long way. All right, so with this out of the way, we can move on over to the events. We're not going to be spending too much time here. Also, guys, for those of you who just want to cut directly to the price action, I will be including timestamps below, okay? But for those of you who want a quick rundown on what's happening with the events and why the events are important, because, guys, let me tell you something. Over the past 4 years where we had the two major turns, which was 3K, as well as the COVID turn right here, there was a huge shift in monetary policy. I'll say monetary policy, okay? And what was the shift at 3K? At 3K in Jan 2019, Jay Powell came out and said that, hey, they're going to be stopping increase in rates. Essentially what they're doing right now, they're increasing rates every month, right? In addition to, they will also be putting a stop to quantitative tightening. Yes, there was quantitative tightening happening back then as well. So in one fell swoop, he stopped two of the tightening factors in the economy, which led to a very, very rapid turn in the markets. People were not prepared for how volatile this move was. A lot of people who sold their bags here anticipating $1,900 never got back in, okay? And they were waiting for the chance to get back in. A lot of them got back in right here. Right? So it's about really understanding how intense the monetary shift is going to be to then anticipate the kind of volatility we can expect. Now, what happened here, this was a V bottom up, because what happened here in terms of monetary policy was unprecedented. Okay, throughout the entire history of American monetary policy, what happened here was unprecedented. Alrighty, there was a huge shift, a lot of liquidity poured in a very, very short time frame. So once again, in this region right here, and that's why those FOMC meetings are very important. What he says is very important, okay? Because as soon as Jan 2019 happened, from Feb moving onwards, we saw a massive rally to the upside and a very, very volatile one. Now, what Jay Powell says here is what's going to dictate whether or not we see a rapid turn or a rather slow one. Now, his turn in monetary policy is going to be affected by these reports that come out. Now, FOMC meeting can be summed up in this one paragraph right here. No participants anticipate that it would be appropriate to begin reducing the federal funds rate target in 2023. What this means in layman terms is that, hey, they do not look to decrease rates anytime soon. Remember, he stopped increasing rates here, okay? So they are not looking to stop that process anytime soon. Okay, that's what the FOMC minutes really summed up. Now, as far as the job reports are concerned, unemployment went down to 3.5%, and average hourly earnings also went down. Remember, that is essentially what they're really trying to control is wages, guys. Okay, they want to see wages come down. Now, this can be either achieved by, hey, companies saying that we're not hiring anymore, or there is more demand for work. When there's more demand for work, now there's suddenly a bidding war, right? If one person says that, hey, I'm willing to work for $10 an hour, one more person would be like, hey, okay, fine. If he's willing to do it for 10, you know what? I'll do you one better. I'll be willing to do it for $9.50. All right. So that's what happens when it comes to a shift in supply and demand dynamics. However, right now, we're going to be waiting on additional data. But so far, I think this is what the Fed wants. They're getting what they want. And this also might be alluding to a soft landing. Now, in my opinion, I think this just gives them more ammo to increase rates by another 50 basis points next month. Okay, they're looking at this data saying that, okay, more people are employed. I think they can withstand another rate increase of 50 basis points. Now, if on Jan 12th CPI comes in lower, okay, less than the previous month, that would be the perfect sort of recipe for the Fed. They might actually be on track to accomplish their soft landing if they just manage to maintain this very, very delicate balance. What does this mean for the markets? For those of you wondering, okay, why are you boring us with this? Okay, what does this mean for the markets, really? If he, honestly, guys, if he manages to continue his rate increases to achieve that 2%, remember, they just have one objective here, 2% inflation and also maintain employment. Okay, if they actually are on track for that and they just try and increase interest rates for until and unless they actually achieve 2% inflation, we won't see something like this. Okay, we won't see them put a stop to the rate increases in QT like we saw right here. Instead, if it's a slow, gradual thing, then we can expect a turn much like 2014 as opposed to 2018. Okay, so it's going to really depend on how he manages that very, very delicate balance in rates. Okay, so if it's a slow progress and he says, okay, no, 50 basis points until they accomplish 2%, then we could see a slow grind up like this one that we saw back in 2014, 2015. Alrighty, that's why this is going to play a very, very big role as to what is going to come in terms of the reversal in market conditions. So now with this out of the way, we can jump to agenda point 3, which is price action. Now we're actually going to start off with a weekly time frame, considering we did open a brand new weekly candle today. Today is Monday. Happy Monday to each and every one of you. I think I forgot to mention that, but I also wanted to mention that, hey, Sean actually has an amazing thesis that basically drives Bitcoin up to a good 200%. Yes. 200%. I'm not lying. Go ahead and check it out. There's like an entire story, a bunch of cascading effects. He's looking at a lot of indicators that have like this crazy confluencing factor, and they're all lining up to the same number, believe it or not. It is an insane analysis, so go ahead, check it out. I will be linking that at the end of the video, so if you haven't already watched Sean's analysis, he's essentially building a story for you guys, and he's going to keep updating you on that building story as far as price action is concerned. So make sure you're moving with him on that journey. Okay, for us today, of course, we'll be dissecting the weekly candle. In addition to, I'll tell you what's going on the lower time frames, because I'm noticing across the board right now, not just with Bitcoin but also the altcoins especially, in fact, is that they're breaking into these volatility zones, and it's a quick sort of move. Okay, they're not giving people a chance to even wait on that pullback. They're just technically just breaking resistance that they've been holding now for weeks on end, but the break is volatile. Okay, so I want to be going over that today because I feel like Bitcoin might be heading into a very, very similar zone right now as we speak. So as far as the weekly is concerned, we've been looking at this range of price action, right? And this is the range right here from 18.7K going all the way down to 15.8K, with the midpoint coming in at 17.2K. Now, this was the region that I said, okay, be careful. And as soon as Bitcoin closes a weekly candle over 17.2K, I'm saying, you know what? 18.7K, here we come. And as soon as we start closing candles over 18.7K, I'm going to be knocking off my bid at $13,000. At that point, I think 13K is extremely grim because, and this is something that I mentioned in my previous analysis, is that the significance of 18.7K over the past couple of weeks has grown tremendously, okay? Taking out 18.7K is going to be taking out some critical regions that has been holding Bitcoin down now since the beginning of the bear market. Now, as far as the midpoint is concerned, I do believe Bitcoin breaks the midpoint even before the weekly, we just started the week, even before this weekly candle closes. However, with that said, there's going to be certain criteria for Bitcoin to meet on the shorter time frames for me to anticipate this actually blowing to the upside sometime soon. So with that, we can actually move on over to our lower time frames. For instance, the 4-hour time frame, because I do believe that the prevailing trend right now is being established on the 4-hour time frame. You can see that we're seeing this ebb and flow of price action, where price is putting in higher highs as well as higher lows. I also want to quickly take you guys on over to the Mango dashboard. The Mango dashboard is throwing some amazing bullish long signals across the board, especially on the altcoins. I managed to catch one on Cardano. Unfortunately, I've been eyeing LTC. I just have a stinking feeling LTC is gonna run, but I'm not able to catch a good bit on that just yet. But anywho, 4 hour on Bitcoin right now, okay, is bullish. This long signal came into us about an hour ago. And volatility, however, flashing 61, telling me that, hey, the bulls might still have a bit more oomph left in them. Okay, but notice the flags that have gone off. We have potential bullish divergence here on the 4 hour time frame. How about the 12 hour? 12 hour also long. This went off 4.2 days ago. Okay, and it stayed. Wow. Okay, so while Bitcoin on the 4 hour flipped, what was this before? This was neutral before, so that technically that neutral was your buy the dip signal, because the 12 hour never really flipped neutral, right? It's been intact now for 4 days. If you took a trade on that, you're by 2% volatility. Look at that, still 17. Okay, saying that, all right, buckle in. This volatility still has a lot more room to grow on Bitcoin. But as far as the 4 hour is concerned, I'll say this. We start closing a 4 hour candle over 17.2K. So $17,230 is the exact number that I'm looking for. And this is the condition, by the way. We close 4 hour candles over 17.2K. I'm saying we get a swift move to 17.5. Okay, this is the short term. So this could even take place today. 17.5K is going to be the next stop. And I do believe it's going to be a volatile one, because this entire block here, it's an order block on the 4 hour time frame. Okay, so this is it right here. That is the order block. So we start breaking into 17.2K, 17.5. Here we come. What is that trade? I think that's a scalper's trade more than anything else. 1.59%. Yeah, definitely a scalper's trade. I don't think there's a range play to be had there. The bigger range play will really come to us as soon as we take out 17.5 in the shorter time frames. Please note my use of terms here, okay? When I say shorter time frames, I'm usually talking about the 1 hour to the 4 hour time frame. All right. So we break 17.5K, we then get up to 17.8K. Why is 17.8 going to be important, right? Why do I have that marked out in a box right there? It's because the 17.8K region, guys, marks out a neckline, okay? I'm looking at this. There's a pattern at play here that you can see a lot better on your daily time frame. I'm going to knock off this really nasty squiggly. You can see a lot better. This is something that we are also building towards right now, right? This is something that I have been talking about, and I will keep bringing it up until this entire pattern gets invalidated or activated, okay, under these two conditions. So if this gets activated, for this to get activated rather, we need to break 17.8K to the upside. Guys, this is a cup and handle like formation. Okay, cup and handle like formations are great as bottom reversal patterns. There are some that are good as reversal patterns, and there are some that are good as continuation patterns. I really like cup and handle patterns as reversal patterns because probabilistically they play out really well. So if I look at the measured move of the cup and handle like formation, plotted on the break, that will take Bitcoin all the way up to 20.6K. Alrighty, this is the play that we're looking for. Okay, this is the story that we're building. Now, 20.6K, great, brilliant measured move. I mean, what is that, right? From the break to 20.6, that's a good 15% to the upside. But what's more exciting about 20.6K is that if we get up there, okay, 18.7K gets taken out. 18.7K getting taken out is going to mean everything for the Bitcoin bulls. And why is that? Because in one fell swoop, guys, we're going to be taking out a bunch of regions of resistance that have been holding Bitcoin down since the beginning of the bear market. All right. Just to show you the two key ones that I personally am going to be looking at is the 4-day dynamic. All right, let's bring that up very quickly. I'm going to knock off my lines, and you'll see that ever since we broke down, which was back here, Bitcoin was at $54,000, 54.6K. We broke down. Every test was being met with resistance except this region right here where we got a bit of a fake out, price dumped, and look at that dump, eh? Not a single wick on the pickup right there. It was so trivial, telling you that this is massive sell pressure, this is massive technical weakness. Anytime you see candles like this, understand that it is technical weakness. If you see the opposite, wherein there's barely any wick to the upside and it's one big green candle, that is extremely bullish. Now, while there are names for these candles, I want you to understand the psychology behind the candle. Forget the name, understand the psychology. Okay, what it means here when you don't see a wick at the top means that, hey, not a lot of people actually came in to sell, right? There were no sellers. And inversely, if you see a candle like this, what this means is that there were not a lot of buyers that came in here. Okay, so while there are names for all of these candles, I want you to really break it down to the psychology. And then what do you know? We saw that, and then we saw immediate continuation to the downside. Now, ever since then, I'll just zoom out of this. We've just been holding it as overhead resistance. Okay, so what this will do is that if we actually manage to meet the measured move, we then take out the dynamic for the first time since back during this fake out. Even the fake out came in at $47,000. Okay, this is going to be a new sort of terrain that we head into during this entire sort of bearish drawdown. So now this is the 4-day time frame. How about the weekly? Where does this set us up for the weekly against the weekly dynamic? Now the weekly dynamic actually caught it on point. We broke the weekly dynamic right here. Okay, every touch of that was then met with resistance, not a single fake out. So once again, right here, what getting up to $20,000 will do is that it will take us back up to the dynamic. However, we wouldn't be clear just yet. Okay, what I will be expecting then is something more like this. We get up, probably a dip back down, getting into dynamic support, and then break right here. A break of this region, whether we get it here or we get it at the dynamic, if it's a rather volatile one, is that we will also be breaking a falling wedge. Now, this is something that Sean also talks about in his video, because not only does he go over the break of the falling wedge, but he tells you exactly what he anticipates right after and what are the targets he sees to the upside for Bitcoin. Okay, so I want you guys to go ahead and check out that video. I'm not gonna give you any spoilers, because I feel like the way he just explains it and breaks it down is it's something to behold. It's something to watch. So I want you guys to go ahead and check it out. But so far, focus on the lower time frames to see if we can get another move to the upside. Remember, the condition that I'm looking for is for Bitcoin to close a 4-hour candle over 17.2K, and the next stop is going to be 17.5K. Okay, so keep it simple, stupid from here. Now, this wraps up Bitcoin. Let me know if you have any questions in the comment section below. We can now get into Solana, because I feel like Solana is bloody bullish right now, man. Okay, so here we have Solana on the weekly time frame. My goodness, this looks beautifully bullish. And you can see, so now the weekly, we had marked out a range for you guys last time from 1467 to 1213, right? That was that region of, resistance overhead and support underneath. We were currently back then hovering at the midpoint. What's happened is that we've closed the week underneath resistance. However, this week we opened up and we've broken into a brand new range of volatility. I need you to understand that this entire region from 1467 going all the way up to 2440, that was a bloody volatile region on the upside, okay, during this markup phase in the previous bull market, as well as to the downside. Now, I need you to understand that this is November 7th, the candle of November 7th. What happened in the first week of November, guys? That was the FTX debacle. If we start ticking up here even further, breaking into volatility zones on our lower time frames, we would have effectively undone the entire FTX drawdown. Okay, and you need to understand that this entire range from $24 to $30, it looks small on my chart, right? 24 to 40, that's a good 26% to the upside. That, guys, is going to be another volatile zone. I think price is just going to rip right through and close over if it comes down to it. Okay, that is the next range of volatility, and that is the major one that I see right here. So as far as price action is concerned, yes, we did not get the pullback that we were looking for. Remember, I was looking for a pullback all the way to 1213, right? I said that, hey, this region at 1467 is critical resistance from the weekly time frame all the way down to your 4-hour time frame. Believe it or not, you guys can go ahead, plot this number. I'm not going to go through it again, but plot this number on your chart and go and see how important of a region it was throughout multiple time frames. So what's happened is that while we have closed underneath that level on almost all time frames, the very next candle opened up with a rather volatile move. Now, personally, I would not buy into a pump like this. I would wait on the pullback before I position, okay? If I get that pullback, that is. Now, I do have conditions as to at what point am I looking for further continuation, and a volatile one at that too, and at what point am I going to be looking for a pullback, okay? So we'll be going over that in just a couple of seconds. I first want to get on over to the Mango dashboard. Let's go to that first. Let's see what Sol is telling us here. Because, hey, if volatility is flashing high, which it is, it could be alluding to a slight pullback, right? So let's get on over to our lower time frames first. So Sol USDT, what is up with Gala? What the hell? Gala USDT, just 1 week ago, we got the long signal. You're up. What? 133%. Okay, I have to look at that chart. Anyways, Sol USDT. Okay, we got a bullish long trend signal 9 days ago. And if you caught a trade on that, guys, you're already up by a good 63% on that trade. It is relentless. Okay, volatility flashing 96. When it gets up that high, it usually alludes to, okay, fine, volatility is super, super high. I usually don't buy. I wouldn't be buying into that volatility. I'll look at the charts to see if I could get a potential pullback on the chart. And also, in addition to this, we have a bullish Ichimoku cloud setup. How about the 12-hour time frame? What's happening there? Sol USDT, once again, bullish long trend signal. This went off 6 days ago. If you caught a trade on this, my friends, you are up by a good 43% on that trade. Ooh, the 12-hour was only 62 on vol, guys. So essentially how I build up a story on here is that if I see that, hey, you know what, the bulls still have a bit more oomph based on volatility, and I see that 4 hours flashing 96, I'll be expecting the pullback on my lower time frames, but only for that pullback to get bid up, and then for it to see continuation getting into the higher time frames. So I essentially use the volatility to help me set expectations on the pullback and whether or not it's likely going to see a bid. This is the time to be using the Mango dynamic for those trends. We're beginning to see trends. For those of you who have access to the dynamic indicator, guys, make sure you're watching that tempo, okay? That tempo is extremely powerful when you have that right setup with price living over the cloud, the dynamic cloud. It's green and you have tempo going off. Okay, pay attention to when tempo goes off now, especially in this phase of the market where we're beginning to see trends actually form. So dynamic is looking good. For those of you who do not have access to the dynamic, I will be giving you the levels as I go. So don't you worry. Right now, dynamic support is coming in at around 1428. But what's important to note here is that in the previous video, we were sitting somewhere around here. Price instead went on to form a bull flag, okay, with the flag being a falling wedge. Now, we did meet the measured move of the falling wedge. However, not the flag. Okay, so where does the flag really take us up to as far as measured moves are concerned? The flag will take Solana up to 1950. Okay, that is the measured move for Sol. Now, the main question I'm sure a lot of you are probably wondering, okay, fine, these are all some amazing targets. However, should I be buying here? Should I wait? Do we see a pullback? I'll tell you what I'm seeing on this chart. I do see an order block on the 4-hour time frame. Now, I usually like looking at the time frame so the trend is being established as we speak. Okay, now this is the order block from here. I think it's about 1671 or 1650. Let's do 1660. Okay, we're looking at the wick right here and the highest point. Drag it. Okay, so this is one big order block that we have in front of us. As soon as we start seeing 4-hour candle closes over this region or inside that block, I'm saying we rally all the way to 1837. Okay, I think that's going to be one very volatile range. So I'll be expecting this. 1837. And now this will also line up with what we're seeing on the dashboard, right? The dashboard on the 12-hour time frame is saying that, hey, you have a bit more oomph. But the 4-hour is saying that, okay, we could see a bit of a pullback here. Now we're seeing that, okay, price is stuttering here. Volatility is high. So if there's any time to be expecting a pullback, I think it would be in this region right here. The only time I'll really expect continuation from this trend is if we break into the red box territory. Okay, I'm keeping this very, very simple. So that would be a bid opportunity on the red box and then ride it up to just the end of the order block, okay, because that is your next region of resistance at 1837. And that's still going to be a pretty decent swing to be had. That's a good 10% to the upside. Alrighty, as far as pullbacks concerned, if price does pull back here, where could I expect it to pull back to? Man, it's not even trading on the 4-hour. It's something lower than the 4-hour. Okay, this is a rather weak 1-hour candle. Notice that not a lot of buyers stepped in right here. We could see price actually pull down to 1524. It would be a better bid opportunity, of course. I mean, I don't have to tell you this, right? 1467 would be the ideal bid because that is your weekly region of support. If you manage to get 1467, nothing like it. But I think it's going to be this range right here. Okay. Right now, that's where the 10 SMA is also hovering at. So that's going to be from $15.30 all the way down to $15. This is like pure freaking TA. Sometimes it can get mind-numbing with all of the numbers, but hey, if you can dissect these charts, there's a lot of money to be made, okay? Even just on the swings, and this is a time where you need to be practicing your execution. But yeah, this is what I'll be expecting for as far as the pullback is concerned for Solana. The only time I'll be expecting another continuation of this trend is if we break into this red box territory with the overhead resistance, the lower threshold of the red box coming in at 1665. Okay. At that point, I mean, Sol is looking good. You want to see how good the chart is looking? If you really want to get a good grip on it, just zoom the hell out, okay? Just zoom out. Look at the weekly. Look at the weekly, turn everything else off, and boom, there you go. That's your picture. On the range, it's looking beautiful. It looks like, hey, it wants to undo everything it did during the FTX drama. So yeah, that's what it's looking at right now. This is what I have for you as far as Sol is concerned. Your next major region of resistance on the weekly only comes in at $24.40, also lining up with the Tenkin, the 21 EMA, as well as, yeah, the Mango Dynamic Indicator. What do you know? Now, speaking of the 21 EMA, this brings me to a housekeeping point. Guys, the 21 under 21 discount code comes to an end. That's 21% off on the indicators as well as the Mango Seed program. Gun to my head, if I had to suggest anything to you guys, it's always going to be the Mango Seed program. The value that you get from there is unmatched. I learned everything I know from the Mango Seed program. So make sure you're, making use of that discount code 21 under 21. I will be linking it in the description below. As soon as Bitcoin penetrates the 21 EMA, it's done. Okay, that code expires. So now, yeah, this pretty much wraps up everything I have to say about the markets and Bitcoin and Solana. And if you have any thoughts on anything else, make sure to mention in the comments section below. Your likes go a long, long way, so make sure to smash that like button. And of course, I will get better, and I will see you in the next update. With this, guys, enjoy your Monday. And yeah, trade safely, trade stress-free, trade the mango way, trade the easy way. Don't forget to catch Sean's video from yesterday. Trust me, you're going to enjoy it.